that image of trading, right? Laptop open on a beach, maybe a few profitable trades before lunch, just complete freedom from the 9-to-5 grind. It's a really powerful lure. Promises control over your finances, escape.
Absolutely. Yeah, that vision of autonomy, of directly influencing your income, it's incredibly appealing. It really taps into something fundamental, that desire for independence.
And it's that allure that gets so many people started, doesn't it? Full of, like, optimism.
Yeah.
But this isn't really a deep dive into those perfect scenarios. We're going to explore let's say, the often hidden realities of trading, the parts that don't quite make it into the shiny success stories. Our insights today, they actually come from a really thoughtful personal account of navigating the whole trading world.
Yeah, and it provides such a valuable counterpoint to, the constantly highlighted wins. It shifts the focus a bit away from purely technical stuff to the very human experience of it all.
Exactly. So whether you've maybe traded before, perhaps you're doing it right now, or maybe you're just kind of curious about the psychology behind these big financial decisions.
Right.
Well, this exploration should be really interesting for you.
Right.
We're basically going to unpack the emotional and psychological journey that's detailed in this reflection. We'll look at the key stages, maybe some of those potential pitfalls that often go unacknowledged.
Our aim really is to shed some light on that less visible dimension of trading, to try and understand the internal landscape that traders navigate, as described in this account, and to pinpoint those really critical moments where perspectives and even behaviors can take some unexpected turns.
Okay, so let's dive in then. The piece, it starts with that initial thrill, right? That feeling of empowerment. You've broken free, you make some successful trades, maybe even see some, quick profits early on. It sounds like a real high.
Oh, the text definitely conveys that initial euphoria. It's described as like a unique sensation, feeling astute ahead of the curve. What's fascinating, I think, is how this early positive reinforcement can quickly build up really strong expectations, maybe even a sense of overconfidence. It's like a dopamine hit every time a trade goes your way creates this powerful feedback loop,
And it also sounds like that early success can create a kind of illusion of mastery. You start absorbing info, feeling like you're just on this continuous upward path. But then, well, inevitably, the market does what the market does, introduces volatility. Losses happen.
Right.
And that seems to be where the narrative takes a really interesting turn.
That's such a pivotal moment. The text really highlights a change in how losses are, perceived and handled. Instead of sticking to a predefined strategy, maybe there's a temptation to start adjusting things on the fly. Widening the levels where you'd automatically exit a losing trade, perhaps, or taking on riskier positions, trying to quickly recover. It really raises an important question about how our sense of control influences decisions when we face setbacks.
Right. It's like the underlying motivation actually shifts.
Yeah.
It's no longer primarily about, say, chasing gains. It becomes about avoiding that feeling of falling behind or, having to acknowledge a loss. That line, you stop trading to win. You start trading not to feel behind. That really jumped out at me.
Yeah.
It signals a pretty fundamental change in mindset, I think.
Precisely. It's a shift from being proactive, goal-oriented, to being reactive, driven by that fear of missing out FOMO on potential rebounds or just the sheer discomfort of admitting a mistake. If we connect this to broader psychological tendencies, this avoidance of negative feelings can actually lead to increasingly risky behaviors, people trying to escape that feeling of being down.
And it's at this point, according to the source anyway, that people start to lose sight of their initial goals. The trading screen becomes this intense focal point, just reflecting pressure and doubt. Even basic risk management stuff like diligently tracking trades, keeping a journal, that starts to fall by the wayside. It's like a snowball effect, neglecting the very things that could actually help.
That neglect of record keeping is very telling, isn't it? It sort of suggests an unwillingness to really confront the reality of the trading performance. What's fascinating here is the interplay between, the external pressure of potential financial loss and the internal pressure of ego, of self-perception. The text mentions a reluctance to just step away because, it would feel like admitting defeat. This taps right into our inherent aversion to loss and our desire to, maintain a positive self-image.
Exactly. It goes beyond just the money. It becomes deeply personal, tangled up with self-worth. And the behaviors escalate, constantly checking the trading app, that fleeting sense of satisfaction from tiny price movements, maybe even neglecting basic self-care. It starts to sound like a cycle that's really hard to break out of.
The analogy to addiction is very apt. The text itself uses that kind of language, and it describes patterns pretty consistent with addictive behaviors. The preoccupation with trading, seeking the reward, even tiny wins or the activity itself, and neglecting other important parts of life.
Yeah.
This brings up an important point, too, about the potential for these, readily accessible digital trading platforms to maybe trigger or worsen addictive tendencies in some people.
And then comes the, well, often inevitable downturn. The trading account gets significantly depleted, and the silence that follows is described as just profound. No dramatic exit, no big fanfare, just a stark reality. And then finally, the full weight of it hits. Not just the financial loss, but the wasted time, the consumed energy, the self-deception involved in the whole thing.
That moment of realization, as it's described in the text, is frequently a very isolated experience. The feelings of shame, failure, they can lead to withdrawal, a reluctance to share what's happened.
Right.
This really underscores the lack of maybe open conversation around the challenges and the failures in trading circles, which can just perpetuate unrealistic expectations and, hidden struggles.
And this leads to a core insight from the source material.
Yeah.
People often don't fail at trading because they lack the ability to, read market charts properly. The primary reason for losses, it suggests, is a lack of preparedness for the intense psychological and emotional demands.
Yes.
The market itself is just indifferent. It doesn't acknowledge your goals, your efforts. That's a difficult concept to reconcile when so much of our lives operates on a more direct, cause and effect basis.
The market's inherent indifference, that's such a crucial understanding. It really challenges the transactional mindset that many people bring to it. In many areas of life, consistent effort, skill development, it leads to predictable progress, more or less.
Sure. Work hard, get promoted, that kind of thing.
Exactly. But in trading, as the text points out, you can execute a strategy perfectly, flawlessly, and still experience a loss, just due to market volatility or some unforeseen event. This disconnect, it can be deeply unsettling. It really necessitates a significant psychological adaptation.
So the key takeaway here seems to be this confrontation with our own maybe less desirable traits, the impulsiveness, the desperation maybe to recover losses, the need for external validation through winning trades instead of focusing on actual skill development. These are the aspects that just get magnified under the high-pressure environment of trading.
The text essentially presents the market as a kind of mirror, reflecting our own psychological vulnerabilities right back at us. And if these underlying tendencies aren't recognized and, actively managed, the market, as the author suggests, will inevitably force a confrontation with them, often with pretty significant financial consequences.
It really highlights the critical importance of discipline, doesn't it? Establishing robust trading systems, maintaining emotional detachment elements that can so easily get overlooked in the chase for rapid gains and the often exaggerated hype around trading success.
The contrast drawn in the text between a disciplined, systematic approach and an emotionally driven, reactive approach is, it's stark. It underscores that while technical knowledge and strategic planning are undoubtedly important, the underlying psychological and emotional framework is frequently the determining factor, both in just sticking around and in overall well-being in the trading world.
Okay, so just to kind of recap where we've been, we've traced this progression outlined in the source, starting from that initial attraction and the early wins.
That euphoria.
To the shift in mindset when losses inevitably occur. Then the subsequent trading, driven more by the need to avoid feeling behind.
Right, that reactive state.
The erosion of control, self-awareness slipping away, and ultimately that often harsh reckoning after a substantial loss.
And running right through this entire progression is that central theme. Individuals are often just unprepared for the significant psychological and emotional challenges that trading presents. The text really emphasizes that losing is often a consequence of being, ill-equipped for the mental game, rather than just a fundamental lack of technical trading knowledge.
And these experiences, they really touch upon some pretty universal human tendencies, don't they? I mean, the allure of quick wins, that strong aversion we all have to losses, the influence of ego.
Oh, definitely.
And even the potential for behaviors to become compulsive, maybe masked under the guise of, investment strategies.
Precisely. If you look at the bigger picture, what's described in this account really reflects broader patterns in how we deal with risk, reward, and failure across, well, all sorts of domains in life. The intensity of the trading environment just amplifies these inherent human tendencies.
And it's so crucial, isn't it, to remember the fundamental nature of the market. It's complete indifference to our personal ambitions, our efforts. It just doesn't operate on the same personal cause and effect basis that we encounter in so many other aspects of life.
That inherent indifference is such a key insight. It forces us to confront the idea that our hard work, our dedication, they don't always guarantee a specific outcome, which can be a difficult lesson, but ultimately maybe a valuable one.
So for you listening, this deep dive into one individual's trading journey really shines a light on those potentially, let's call them ugly aspects of ourselves that can surface in high-stakes environments like treating the impulsivity, maybe feelings of desperation, the need for external validation.
Yeah, and reflecting on these aspects of our own psychology is incredibly valuable, I think, regardless of whether or not you actively participate in trading. Understanding our inherent tendencies can provide significant insights into how we make decisions under pressure in, well, any area of our lives, really.
So here's a final thought, maybe for you to consider. If the most significant risk in trading isn't actually the market itself, but it's our own minds, what are the most critical steps we can take to truly understand and effectively manage that internal risk, whether we're actively trading or just facing other high-stakes situations in our lives?